Hello, it's Mark from Landmark Financial Services Group, and as I said in my previous video, I hope that you and your family are staying safe and healthy through all of this craziness. Today we're going to talk about another opportunity relative to the negative impact all of this has had on the financial markets, and that's what we call tax loss harvesting. And what does all that mean? Well, if you go into your taxable accounts, this doesn't apply to your retirement accounts, just your taxable accounts. You go into your taxable accounts and you look at your investments and you realize that some of them have actually lost money from the time that you bought them, meaning that there's a built-in loss to it. Well, the idea is, how about we trigger that loss that can be used on your tax return next year? It's actually your 2020 tax return that we'll file in 2021. And so the idea is that if you trigger the loss and we get to use that on your tax return, it'll first offset any capital gains that you have, which is great because as anyone's invested in mutual funds, you know they throw off a lot of cap gain distributions in December. So we can offset those gains. And then if you have exhausted all your gains, you can still on your federal return use up to $3,000 against ordinary income. So it's a really interesting idea to pursue. Now, there is one important rule that you have to keep in mind, and that is what we call the washed sales rule. This is a tax rule, and it says that you can sell a security, recognize the loss, but you can't buy that same security either 30 days before or 30 days after that sale. Okay? And that's the IRS's way of basically saying, look, you can't just trigger losses to put on your return. You just, for that purpose, okay? And still be in the same investment position. Okay, that is, so if you're going to sell because it's an investment decision, not a tax thing. But we can still use it, and let me tell you how. It is possible, okay, to sell ABC Growth Fund and trigger the loss, take the proceeds and invest it in XYZ Growth Fund. Now, you stay in a very similar investment position, but the loss on that is in fact allowed, okay? I just can't sell ABC Mutual Fund and then buy it right back within 30 days, okay? So the idea is to trigger capital losses in your taxable accounts that we can use on your tax return to offset all of your capital gains and then up to $3,000 of ordinary income, and still stay in a similar investment position. Okay, so I hope I didn't confuse anybody. It's an interesting opportunity because the market's down today, and so that's why I'm proposing it. If you have any questions about this or anything to do with your investments, your portfolios, or taxes, it's a great time of year to reach out to us. You can find me at 978-984-5425, or you can look us up on the web at lmfsg.com. Stay safe and healthy. Thanks.